Hey, what's up everyone and welcome to the School of Personal Finance. So with inflation remaining stubbornly high and everybody feeling the daily pain of these prices like we're getting beaten down every time we leave the house, two positive things that have come out recently are that one, the IRS has increased the contribution limits for all retirement account savings. So that's a good thing. And the second thing also is that they've expanded the tax brackets to account for inflation and increased the standard deduction for your taxes. So in this video, I'm going to go through what that exactly means, what the numbers looks like, how you could take advantage of it, and how it's going to impact your life. All right, let's get to it. Real quick before we get started, make sure to check out schoolofpersonalfinance.com. Go download the free budget template. Check out all the resources that I have over there. I'd love for you to become part of the community. All right, so these inflation numbers, they're still very high. We're still feeling the pain. Like gas prices have come down a little bit, which is helping. Commodity prices have come down off of their highs, but still like food, rent. I feel like every time I leave the house, everything is still very expensive, where you have sticker shock when you're looking at prices walking through the grocery store or the clothing store or even services, everyday services that you use. It really makes you want to curl up in a ball and not leave the house or spend any money. But for this video, we're going to talk about some of the positives. So, the first one being that the IRS just recently announced the biggest increase in retirement account contributions ever. So like in your 401k plan or your 403b plan or your 457 plan, in 2022, you could contribute $20,500 into your plan. All right, so now they are increasing that amount by $2,000 in 2023. So you'll be able to contribute $22,500, which is nice, especially if you are able to take advantage and max these accounts out. Now, I've been talking all year about patience, sticking to your plan, continuing to try to max out these plans, dollar cost average, not doing anything crazy, not making any huge moves because this economy feels terrible, but continuing to max these plans out. And next year, I think it's going to be the same thing. If you could do it, if you could max it out, market's down 25%, it's a great time to be dollar cost averaging. In the long run, you'll be happy that you do it. So at least you could squeeze a little bit more money in there now. And then for the catch up, for people that are age 50 and older, currently in 2022, you are able to do $27,000 a year. And now that is going up to $30,000 a year into your 401k or your 403b or your 457 plan. So $30,000 a year in 2023 if you are ages 50 and older. And now for IRA accounts in 2022, you could contribute $6,000 a year. And if you're age 50 or older, you have a catch-up contribution of an additional $1,000. So you could do $7,000 a year in 2022. That number is going up as well. So 2023, you'll be able to contribute $6,500 into your traditional or Roth IRA. And if you're age 50 or older, you'll be able to do $7,500. So going up by $500 a year for the IRA accounts as well. Now with traditional and Roth IRAs, you always have to be aware of what the income limitations are. Make sure you qualify on the traditional side for the tax deduction. Make sure you qualify for that. Or on the Roth side, make sure that you're under the income limitations to be able to make that contribution. Or you could still do the backdoor Roth IRA as of right now as well. So just another way for you to save a little bit more for retirement if you are able to. And then for people who have after-tax contributions allowable in their 401k plan, maybe you have a mega backdoor Roth option available, or for people that are self-employed, like if you have a solo 401k, those contribution limits are also being increased. This one's being increased by $5,000. So in 2022, the total amount that you could contribute between pre-tax, Roth, after-tax contributions, it was $61,000 and it's going up to $66,000. And then if you are age 50 or older, you also have that catch-up contribution where you'll be able to go up to $73,500 in total in 2023. And that total amount of either $66,000 or if you're 50 or older, the $73,500, that also includes employer matches. So if you get a match from your employer, so that's the total amount that you could put into these plans in 2023. All right, and now the changes to the tax brackets and the standard deduction. So for 2023, the standard deduction has been raised about 7%. So let's go through it real quick. So if you are a single taxpayer, then your standard deduction is going to rise by $900 per year. So it's going to be $13,850 now, up from $12,950 in 2022. And now if you are married filing jointly, then it's going to rise by double that, by $1,800. So your standard deduction is going to go from $25,900 up to $27,700. And then for head of household, it's going to rise by $1,400. So your standard deduction is going to go from $19,400 up to $20,800 in 2023. Now, just as a refresher as what the standard deduction is, it is basically a deduction that everybody is eligible to take to reduce your taxable income for the year. Now, if you have more deductions than the standard deduction, then you would do what's called itemizing your deductions. Then you would itemize all of your deductions so that you could deduct more than your standard deduction. So it depends what you have going on in life. Like usually, if you're a homeowner, if you have high property taxes, if you make a lot of charitable contributions, in that case, then you might be better off doing an itemized deductions because your deductions are going to be higher than the standard deduction. But the standard deduction, many people in the United States use the standard deduction, and this is going to help you pay less taxes, shield more of your income from having to pay income taxes on it. And now just remember that this changes the 2023 tax year. So that's when you file, by the April deadline of 2024. So not for your taxes this year where you're going to be filing in April of 2023, it's going to be for the following year. Now, a couple other items like the gift tax, they increased that. So the gift tax exclusion, so now you could gift up to $17,000 per year without having to file a gift tax return. And then one not so good adjustment is they increased the amount of wages that are subject to Social Security tax. So in 2022, it's $147,000. So you'll notice in your paycheck, once you get over $147,000, you no longer have Social Security tax taken out, right? That is the cap for your income that you pay into Social Security. That's going to now be increased in 2023 to $160,200. So once you get over $160,200, then you will no longer have that Social Security tax withdrawn from your paycheck. So that's not a very good increase for all of us out there. All right, now let's take a look at the actual brackets and the increase in each of them. So if we look at single filers here, you could see that for the 10% tax bracket, it's going up from $10,275 up to $11,000. And then for the 12% one, right, we could see that they all have gone up about 7%. And now just to give you a little refresher on how taxes work. So if your taxable income, so that is your adjusted gross income minus all your deductions that you get to that taxable income number. You take that taxable income number and you basically throw it against this tax bracket to see how much tax that you owe. And we have a progressive tax system. So what that means is that if you're single, now in 2023, your first $11,000 of taxable income will be taxed at 10%. Right? So you would owe $1,100 on your first $11,000 of taxable income. And then after that, for your income between $11,000 and up to $44,725, you will owe 12% for that amount, right? And then over $44,725 up to $95,375, you will owe 22% for the amount that you've earned between those amounts, and so on and so on. So for somebody that has a taxable income of, let's say, $200,000, right, they would fall into this 32% tax bracket if they are single. All right, but that doesn't mean that all of their income is taxed at 32%. It goes through the brackets, and then you add up how much tax you owe in each of these brackets to come to that total tax liability. And if we look at the married filing joint, it's just double of what the single tax numbers are. So, the 10% rate, if you are single, it's $11,000. If you are married filing joint, then it's $22,000, right? That's going to be taxed at 10%. So if you're married filing joint and you make $300,000 a year, then you would be in the 24% tax bracket. So now these numbers, this is a nice increase, right? So in 2022, for any dollar you made above $340,000 but below $431,900, you would be taxed at that 32% tax bracket. But now that goes up to $364,200. So you basically have an additional $24,100 that's going to stay in this 24% tax bracket before you get kicked up up until this 32% tax bracket. So this is an expanding of these brackets, right? They're increasing the dollar amounts that are subject to each one of these brackets. So the tax rates over here have not changed. What has changed is the amount of income that is subject to each one of these brackets. So, there's good things that come out of this, right? So like if you are in a low tax bracket, right, that bracket's been expanded a little bit, and say you're implementing a strategy like doing Roth conversions, trying to fill up a tax bracket. Say you want to fill up the 12% tax bracket and you're married filing jointly, right? Now you could do it up to $89,450 and still be subject to 12%. Where in 2022, once you go over that $83,550, then you would jump yourself up into that 22% tax bracket. So this does give you more room to work with as far as trying to fill up these tax brackets and taking advantage of the lower rates. And if you have a high income, then all it means is that you have more income that's going to be subject to the lower tax brackets, which is a good thing. But as a result of these expanded brackets, your paycheck should be higher starting in January. So you might even want to revisit how much you have withheld from your paychecks for federal and state income taxes. You might want to start thinking about what your tax bracket might look like for 2023. Maybe it'll make sense for you to contribute more to a Roth 401k as opposed to doing everything in the traditional 401k, because the tax deduction might not be as valuable to you if you're going to stay in a lower tax bracket. So all of this stuff, it affects your long-term savings plan, your financial plan overall, and you just want to make sure that you're implementing it and taking advantage of everything that is going on here. Another thing is you have to account for the fact that you might be paying more in Social Security taxes if you have a high income. So that might offset the breaks that you get from having these expanded tax brackets. So you want to think about that as well. But overall, these are positive things for us. They should make our paychecks bigger throughout the year, hopefully, and have us paying, less in taxes. All right, everyone, that is it for this one. I hope that you found it helpful. Please make sure to hit that like button if you enjoyed it. Check out schoolofpersonalfinance.com. Make sure to download that budget template over there. I will see you again in the next one. Thanks.